Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Brian Adams. Thanks for being on the show, Brian.
Yeah, thank you for having me. This will be fun.
Brian is a president and founder of Excelsior Capital, where he spearheads the investor relations and capital markets arm of the firm. He has 10 years of experience in real estate private equity, and prior to forming Excelsior Capital, Brian co-founded Prime Properties, an institutional real estate private equity sponsor in 2010, and provided leadership and direction for the firm in connection with capital markets, investment management, and investor relations. So you're a perfect guest for our show, no doubt about it, Brian, just your experience in this business. We'd love to hear a little more about your background, maybe what brought you into, just this business, private equity, real estate syndication, and growing your brand and your name the way you have. So give us a little background. I'd love to just dive into just your capital raising abilities and just, the way you've scaled.
Yeah, sure. Happy to. So I'm a New York guy originally who married a Nashville girl. We met up in college in Connecticut, and I went to law school in Boston. We moved here to Nashville about 15 years ago. I practiced law for a number of years, and then my wife's family has a family office. So essentially a family investment partnership for the benefit of their family descendants. And they have exposure and had invested in commercial real estate private equity for the last 25, 30 years. So I knew nothing about the business until I joined the family board. And then I saw some of the investments we had been making, some of the sponsors we had been working with, some of the GPs I got to be, friendly with. And I just fell in love with the business. I thought real estate was terrific. It was a lot better than being an attorney. And so I connected with another New York guy who married a Nashville girl. We started our company 10 years ago. We initially started raising funds, so kind of blind pool, commingled investment vehicles from friends and family. We raised a series of those funds, but then really got into the syndication business about midway through. And once we started syndicating capital, we grew exponentially, probably, frankly, too fast. And we probably bought about $200 million, $250 million worth of real estate in the span of 4 or 5 years. And we can go into it later if you want. I made a bunch of mistakes and had terrible screw-ups trying to scale that efficiently, but definitely understood the product type and the offering that individuals and families wanted. And so at this point, we have a portfolio of property that's roughly $250 million that we recapitalized with an institutional investor. And then for the last 2 years, I've been focused on purely syndicating capital on a deal-by-deal basis on the asset level to purely individuals, families, independent RIA, boutique wealth management firms, no institutional LPs. And so that's where we are today.
Nice. Wow. So yeah, I would love to talk a little about your, maybe in a few minutes about your, the 250 million in 4 years. You talked about many mistakes. I think that can be very beneficial to a lot of the listeners. I'd love to know, or us dive into just, your secret sauce on raising capital and just how you developed that, over the years. You've gotten into the business and you've made lots of connections, no doubt. But what was, walk us through that a little bit, maybe early on, your ability to raise capital and how you grew that to where you're at now.
Right. So this is going to sound cavalier and it's probably going to come across as obnoxious, but honestly, the secret sauce to raising capital is to actually listen to your logical investor base, right? So I'm not talking about the Saudi Arabian pension fund, right? Because that's not a realistic investor for you, or it's not for me. Probably isn't for a lot of folks listening to the show. If you write down 50 to 100 people that will realistically take a meeting, they will realistically give their resources, time and money to you in return for your product offering, and you actually listen to what they want. Don't just cram down what do you think is a cool idea or a cool investment or a great deal. Because if you have a best deal in the world in your mind, and you think it's terrific. But unless you can raise capital to acquire it, it's just art. And art's wonderful, but art is not a business, right? So if you want a business, you need to have a product offering and a service that people are willing to give up their resources for. And so about halfway through my journey of trying to cram down product into my investor base of what I thought was cool or interesting, I actually did kind of a mini roadshow, and I sat down and listened to what my investor base wanted. And I realized they really wanted three things: capital preservation, access to real assets, yield, they wanted income generation, and they wanted to really push the tax benefits that come with direct real estate ownership through their K-1 as a taxable investor. And once I pivoted my product offering and my investment thesis to satisfy those three things, that's really when I started to raise, much more efficient capital.
Capital preservation, yield, and tax benefits. Did I get that right?
That's right.
Nice.
Go ahead. A lot of entrepreneurs and people who want to get in the business talk about IRR and multiple and all these other things that are great. But frankly, in my experience, even sophisticated family offices, they don't care. So just give people what they want.
And would they be in that order? I would imagine probably so. I mean, capital preservation.
I'd say certainly in today's environment where the stock market has extreme volatility, it seems like it's extremely expensive right now. Yields on bonds or fixed income or corporate debt are terrible. But taxes, are a real issue. And even though it doesn't seem like it on the CPI level, inflation is real, right? Anybody who pays tuition or is buying a home feels that inflation coming. And so it's really, I think, a way to put some money to work outside of the public equity market, but also to get something in that, I think realistically 6 to 7 to 8% cash on cash yield, that current income, so they can pay for their lifestyle, they can maintain their quality of life, and or maybe be opportunistic with some other type of investments. But cash is king. And I think especially an inflation hedged product will do very well over the next cycle. And that's where, investors that I talk to on every day, the stock market's scary, and municipal bonds or whatever kind of fixed income their financial advisor wants to put them in, the yields are awful, right? So it doesn't make a whole lot of sense to lock up your capital for that. So I think you just need to listen to, what the needs are from your investor base and deliver on them. And once you start doing that and giving them that experience, it's much easier to raise more capital from your existing investors than it is to go out there and make a brand new relationship, right? That takes time. And especially in a COVID area where we can't necessarily meet with people in person, this is much more powerful in my opinion.
So you mentioned like delivering on those things. So ultimately listening to what they want and then delivering on what they're requesting, what's most important to them. And what you found was capital preservation, yield, tax benefits. You mentioned like pivoting, changing your messaging. Can you elaborate on that a little bit? What was your way that you got that message out? Was it pamphlets? Was it just the way you spoke to people? Was it a little bit of everything? Could you elaborate?
Yeah. So I think, a lot of people, especially in our business, when I meet young entrepreneurs or people that want to be a sponsor or syndicate capital, they always, lots of them will try to third party the capital raise, or they'll say, oh, when I raise a little bit more capital or have some more, revenue coming in and income generation, I'll hire a chief marketing officer or I'll bring in a third party to do the capital raise. Wrong. If you, as the principal and sponsor, are not the chief sales officer and the chief marketing officer, you will fail. This is an exceedingly capital intensive business. So unless you feel comfortable getting 100 no's a day and making up 200 asks, it's not going to work. You cannot offload that. No one will have the passion or the drive that you have, and no one will understand the story the same way that you do. And so I think that's a really big mistake that people make. In terms of how to present it, oftentimes when people do the pitch, kind of like you did, you teed me up and I gave you my background. Honestly, no one really cares, right? No one cares that I'm from New York. No one cares that I went to a liberal arts college in Connecticut. Nobody cares that my wife's from Nashville. I mean, not really if you ask them. What they care about is how can you address their needs? How can you help solve their problems and allay their fears? And so once you understand what their fears are and what their needs are, just come out of the box and tell them what you do and how you can address those problems. And I think your pitches will go much smoother.
Love that. I love just getting right to the point, and just putting it right out there. No doubt about it. And they don't want to waste their time either. Right.
Yeah. Right. I mean, we all have a great story. And once you get to know people, that's wonderful. You can have a drink and you can talk about all these things that you did. But when you've got, when I was a district attorney and I was doing jury trials and we would do summations or open remarks, we were always taught that people lose attention within the first 5 to 7 minutes. So when you have the opportunity to talk to a potential investor, are you going to burn 5 or 7 minutes talking about where you went to college? Nobody cares, right? I mean, if you're in this business, you're probably smart. If the investor wants to hear the pitch, they probably understand on some level what you do, and they're already comfortable with the risk or the investment thesis. Just address what their problems are and help them solve the problems. This is sales 101, but I continuously hear pitches where people talk about their track record and why they got into the business and their sob story, when I think all those things are important, but I don't think the investors are listening.
Okay. So, how did you, I know we talked about changing your messaging and then talking about, listening. It's so important, right? And like you talk about any sales training, you're going to hear, you got to listen to what your clients are looking for and then have that product, right? And I love how you said, if you're not the chief sales officer, you will fail. And I think that's important to realize up front. That you mentioned putting out, would you say 200 asks and being willing to receive 100 no's or more,
whatever the number is. I mean, you've got to realize, there are 12.4 million accredited households in America, not individuals, households. So you're talking about converting 1%, and you're a top 1% sponsor or syndicator, right? I'm not saying be aggressive. I'm saying it's not a sales call unless you make an ask. Right? So make the ask, get the no or get the yes, but aim, shoot, and move on. And I think oftentimes, for whatever reason, nowadays, people who are in their 30s or 40s that want to get into this business, they don't want to be associated with being a salesperson, but it's what you are. So you need to embrace it, make the ask, be very transparent with what you do and what you don't do, because you don't have to be everything to everybody, right? I'm trying to capture a niche population that I know wants my product. And it's just a matter of bridging that divide between what I do and the people that want it.
So where maybe you can make a suggestion for those that are listening that are just getting into this business, or maybe they've done a deal or two, or just building their investor base. But even and you personally right now, where to find investors, where are you connecting with them now, just so you can have that conversation, so you can eventually make that ask.
Yeah, I mean, pre-COVID, I was a road warrior, right? 100, 150 flights a year, conferences, grinding it out, coffee meetings, lunches, drinks, dinners, and that's what I did. I've had to shift a little bit during COVID, and I've really embraced LinkedIn as a great venue and a marketplace to make these type of connections. And so it's really powerful if you can understand the right way to use it. And I think one of the issues that, and I may say something that not a lot of other sponsors are going to like, but it is what it is. I think what you see a lot of is other sponsors and syndicators cannibalizing each other's time, right? I had these many phone calls this week, but when you look at who they talk to, it's other syndicators and sponsors. I don't think that does a lot of good, right? I mean, you're trying to get out there and engage with your investor base, not other people that aren't going to, provide capital to what you do. And so I think you've got roughly 12 hours a day where you can be productive, unless you want to go crazy and not work out and not have a life or social, whatever. So you have to think about how you want to spend those 12 hours and how you can not just use those 12 hours, but multiply the time that you put into each hour to have a greater effect and a knock-on effect, where instead of outbound marketing, you're inbound marketing. And I think that's been the biggest change of mindset for me personally.
Wow. So it's incredible to hear just how you've embraced something else, or LinkedIn, as opposed to, how you were doing it and traveling 150 days a year, or trips, or whatever, however you say that. So now that I guess you're staying at home now, right? You're more remote. You're not on the road as much. Maybe you can elaborate on why LinkedIn, and how do you learn a platform like that to embrace the same caliber of results that you were reaching while being able to do it in person?
Yeah, I just became a total LinkedIn junkie, like a total nerd. I listened to podcasts. I read up on articles. I tried to understand how the algorithm works. And really, I tried to understand how my logical investor base uses LinkedIn to source opportunities, right? Because these are individuals and families, for the most part, who are looking for deal flow. And so it's that typical marketplace dislocation between one group who wants your product, the other group who has the product. How do you guys meet? And the really powerful thing about LinkedIn is it's 24/7, right? So I post once in the morning, I post once at night, or in the afternoon. And I try to post things that have meaningful content for my logical investor base. And then we do a lot on the content side. So once a week, we do a webinar, typically very technically focused on commercial real estate aspects like 1031, cost segregation analysis, whatever. But I think it's also important to realize that in our world, you're not trying to get all of the assets that these people have, right? I mean, we're not wealth managers. I'm not trying to get all of your AUM. I'm only trying to provide a slice of your capital to put to work. And I don't want all your AUM. And so also just being a resource for people, right? So if these individuals, the 5 pain points, and I'm addressing one, try to help them with the other 4, and just be, useful and productive, and try to build that good karma up, and it will always come back. It will always come back.
What's been the hardest part of your just journey in this business of real estate and syndication?
Yeah, I mean, once I realized an efficient way to raise capital, we became deal guys, right? Which is, we found these great opportunities. We're going to do these deals. We're going to close them. And we did. We acquired a lot of real estate in a short period of time in our world. And I made a huge amount of mistakes because instead of leading with what I should have been, which is investor relations, business development, communication, we just focused on doing the deals, and all that stuff got pushed to the back burner. And it was a huge mistake because it really alienated a lot of my investor base. And so what I did starting 2 years ago, I scrapped everything, went down to the bare bones. I hired an internal controller who's a CPA with a public accounting tax background, because tax is huge for investors who are taxable investors. I got Juniper Square, which is, a great investor relations CRM, 365, 24/7 investor portal, which is just terrific and does all kinds of great things. And I started leading with, hey, we're going to be best in class for investor relations, communications. We're going to go over the top and provide you with all this information and accessibility. And now, out of 450 some odd investors, I rarely get a phone call, because it's all right there for them. And we're getting way out in front of anything, which I should have been doing early in my career. But frankly, I think making those mistakes and having that painful period of my life as a manager ultimately makes me a much better sponsor. And so I'm not happy it happened, but I do think it was a necessary pain point for me to be where I am today.
Nice. Well, and I wanted you to elaborate on that a little bit. I know we briefly mentioned it earlier. 250 million in 4 years. I mean, most people listening would dream of being able to scale that fast. Can you elaborate any more on just mistakes made scaling that fast, or things you would have done differently? Anything at all that the listener or even myself can just take from that.
Yeah, I mean, obviously it's a bit cliche, but just because you can do a deal doesn't mean you should, right? And ultimately, just because you can make acquisitions and raise that capital, you've got to understand that there are 2 distinct parts of our business. There's the deals themselves, right? There's the acquisitions, there's the underwriting, there's the diligence, there's making a good investment based on the thesis that you have. But there's this whole other component of the actual business that you're running, which is, the vehicle that enables you to make those investments. And for a long time, I didn't really spend that much time or effort on the business side of it, because you have to understand, if you're an investor, you're taking a risk that this sponsor knows what they're doing in the real estate world, right? But especially as a younger sponsor or a newer sponsor, that investor is also taking a risk on you as a small business owner. And I think what's important to understand is investors who've been doing this for a while, they understand they're taking a risk on the deal, right? I mean, COVID happens, 9/11 happens, '08 happens. These things happen. It's a big boy game. That's why accredited investors are accredited. But what you need to focus on, in my opinion, is taking care of everything else on the small business side and de-risking the small business component. And it takes money, right? It takes energy and effort to have that kind of system in place for the enterprise level. So I think it's really important to understand that you need to have all these things: investor relations, a really good portal, a really good in-house controller, accountant, really good asset management, a decent office where you can actually do the work. Those things are all separate from the deals, but they're just as important. And frankly, it's probably more important.
I'm grateful for you hammering that home, because if you don't have the business side, if you don't have the investor relations component alone, the property doesn't mean anything, does it?
And maybe you should just be an allocator, right? Maybe you should just, really focus on underwriting GPs and sponsors, and you have your own relationships, and you come to me and you say, hey, I like what you're doing. Let's have a relationship on a business level. That's fine. But I've got 12 employees, right? So that's a legitimate HR issue. I've got to worry about all these other things that have nothing to do with office buildings. But from the investor side, that's how they experience it every day, right? And so even if it's the best deal in the world, unless you're transparent and communicative and addressing the actual needs of those investors, it doesn't really matter.
How did you develop the business side? I know you've talked about how important that is, and I couldn't agree more. I know that's been a growing point and a struggle for me personally as well. I can raise a lot of capital now, work with hundreds of investors, and we've done that in a short period of time, I feel like, and try to do it the best that we possibly can. But then, just like you said, when you're talking about, okay, we need to hire somebody for this, we need to hire somebody for that, I had to go back and think, well, okay, what should that job description be? What should these things, be for this person, or what, and those are things you didn't realize maybe 5 years ago you were going to have to deal with. Right.
Yeah.
And so how did you learn to operate that business and put those things in place?
Just by making huge mistakes and screwing it up initially, and then talking to sponsors and GPs that are 20 years older than me and asking for as much free advice as they're willing to give me, and being unabashed about it. Calling up a sponsor who I know has done really well, track record, grown a great company, saying, don't just ping them and say, hey, I'd love to pick your brain. I want free advice because you seem to be doing a really good job, and I want to copy everything that you've been doing so that I don't step in the same pothole again, right? And that's part of this community, which is really cool. Not every sponsor is going to respond or GP is going to respond, but the ones that do, they're just a gold mine because they've made all these mistakes too. I think oftentimes we look at them as, oh, they've achieved this greatness and they're perfect, they're terrific. Never the case, right? They're all been on this hero's journey of chapter 1 is this great idea. They do this thing and it's wonderful. Chapter 2, they have failure. And chapter 3 is the redemption, right? That's what we all like to see. So if you can find folks in chapter 3 that are willing to be honest about what chapter 2 looked like for them, it's so much more valuable to understand what not to do than it is what to do. Because I think we all have a sense of what we should be doing and what would look great. But really avoiding the pitfalls is what's going to prevent you from having catastrophic failure in your business.
Wow. Great content, Brian. I'm just grateful for you being willing to share so openly. Unfortunately, we just have a few minutes for a few last questions, but I just want the listeners to know Brian's going to come back and we're going to talk about some different things about demographic shifts and just changes moving forward. Just looking forward to just getting his opinion and expertise in those areas as well. But Brian, what's a way that you've recently improved your business that we could apply to ours?
Gosh, that's a really good question. I think, recently one of the things that we've been focused on is educating our investor base about some of the things that they can do to amplify their returns, and really educating them about conversations they need to be having with their other sponsors and other GPs and other opportunities. So, you know, if you're an investor and you've got office investors with me and retail, multifamily, et cetera, with other groups, just being really transparent and saying, listen, if your GPs aren't doing cost segregation analysis or bonus depreciation, that's a problem. And you need to talk to them about that. If they're not using a best in class investor portal, you need to push them on that, because it will make a huge difference for you as an investor. And so I think it's, oftentimes before I pivoted towards this kind of outbound or inbound marketing concept, I was really worried about giving away my secret sauce, right? Like, even though it seems fairly simplistic, I was nervous because I thought, gosh, people are just going to take these ideas and run with them. But what I've realized is, if you give it away for free and you're a resource for people, it will always come back. And so I've just told everybody on my team, listen, we are going to be a huge resource for all of our investors, all of our competitors. We're going to tell everybody what we think is best practice. And it's been hugely beneficial to our growth. And so I think it's confronting that fear that you might be taking away from some kind of zero-sum game, but it's really not. And I think we should all do a better job of trying to take away some of this kind of opaqueness that exists within this kind of private equity accredited investor world, and just be more honest and transparent. Because once investors think that you have, accomplished a good business plan and that you're a thoughtful person and a thought leader, it really changes the whole game, in my opinion.
Being generous always pays off, right? And most people that you do hand all your information to, there is a very small amount that's actually going to probably do anything with it.
Yeah,
which is
absolutely.
unfortunate. Yes, great advice. And so, what's your way that you stand out, with investors? Maybe, that you stand out amongst, your competition. What are a couple ways, or at least one that you've really found that, okay, I stand out because of this?
Yeah. The reason I got into office originally was when I talked to my logical investor base 10 years ago. Everybody had exposure to multifamily. Everybody had exposure to triple net retail. Over the last few years, self-storage, mobile homes, data center, cell phone towers, et cetera. But it's a pretty crowded trade, right? And so I think what is important for me to understand is delivering people a product type and an offering that still hits a reasonable return threshold on a risk-adjusted basis, which is a really fancy Wall Street jargon way of saying, find a niche where you can exploit inefficiencies and be comfortable with the fact that you may not be able to scale it to $1 billion business, and just run the business that you want to run and work with the investors you want to work with. I'm fortunate enough at this point in my career where I can tell LPs no. I mean, I don't do that, but I have a no jerk policy. I don't want to work with some Wall Street guys who are going to rip my face off. I don't like doing business like that, right? So I think having a very hard look of where do you want to be and how can you get there is really important, because oftentimes we just kind of run into this idea and run into this company. We start doing things for the sake of doing them without ever reflecting on, like, what's the end game? Who am I and where am I going? And knowing that yourself, I think ultimately will make you a better manager.
What's the number one thing that's contributed to your success?
Marrying into my wife's family. I have an unbelievable advantage over almost anyone else because of my wife's family and their success. And also I have incredible privilege being, a decent looking white guy that went to great schools.
Wow. How do you like to give back?
So we are on a company level. We partner with a local food bank. It's like Second Harvest, but it's only based at Metro Nashville. And so obviously during COVID, it's very hard to do things in person, but food drives and that kind of thing, I think is something, hunger is something that we can all get behind. It's not controversial. And then on a personal level, I do a lot with individuals and families who have children with special needs or developmental delays, specifically within the athletics sports world. And so I pick kind of two things, one on the business side, one on the personal side, and try to do as much as I can there.
Wow. Well, thank you for that, Brian. I'm grateful for how you've given back today, and it's a great show and just great content. I know so many have learned so much and taken so much away from just your experience and you being willing to share very openly just about the hard times. Even scaling too fast can be an issue sometimes, right? And just you being very open about that and just really getting your messaging down and listening to investors and how you built your team. So tell the listeners, though, how they can get in touch with you or learn more about you.
Yeah. Thank you again for having me on. It's a lot of fun. I'm very active on LinkedIn. Like I said, Brian C. Adams. If you reach out to me and you message me, I will connect with you and I will set up a time to talk about anything that you want to talk about. And I'll try to give as much free advice as I can possibly give. More, hopefully, tell you what not to do. You can follow us or you can check us out. Our website is excelsiorgp.com. And feel free to give us a shout. We'd love to talk.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.